Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is February 6, 2012, doing another market wrap-up and going over some of your charts as well. About 3 of you in the chat room asked me to go over DEXO, XLF, and FFN as trade setups, and I think there's some pretty good possibilities there. Starting with FFN, you have a nice downtrend that's been taking place in it since basically its IPO back in May of last year. But what you have back as late as January 30th of this past year, or of this year, you had a breakout, you had some consolidation, and if it can get above like about 138 or so, you can make a good day trade out of this. If you're wanting to swing trade it, just be cognizant of the overnight risks that take place in a stock like FFN, because it can gap down and hurt your position pretty good. So base your position sizes off of that risk, knowing full and well that you could wake up on a stock like this and be down 10 to 15%. Also know when the earnings are coming out. Stop losses, I'd probably put my stop loss somewhere around like 112, which is a lot wider of a stop loss than what I like to take on typically, but because it is a dollar stock, those kind of risks have to be made when you're choosing to trade in stocks like FFN. Overall, a good chart though. I mean, I like the fact that you're looking to go long on this now that it's broken the downtrend. The nice consolidation here near the highs gives it a good chance to keep pushing higher, maybe go as high as 170 something, like 175 or so. DEXO, I like this chart as well. I think it has a lot of possibilities. You can see here it's trading in a nice channel, and it has pulled back on light volume to its existing trend line off of those October lows. It's trading right on the 200-day moving average, closed just above the 50-day moving average, so that provides you some support going into tomorrow. At the open, I try to get in between 175 and 169. If it hits the 169 after you get in, like 168, 169, that would be a very aggressive stop loss and maybe a place where you want to get out, particularly if it closes below that level. Because you can see this is a strong upward trend. Now, if it drops below it, you could use 164 or so for your stop loss as a much wider, less aggressive stop loss. So those are your two choices there. And then the other one is XLF. Which I really don't see a trade setup in it right now. If it pulled back, say to like 1428, maybe as low as 1416, I could see there being some opportunity to go long, but right now it's getting fairly parabolic, and no way to know whether or not there's really that much room left overhead. But I don't know. I mean, the market's been acting crazy lately anyway, so who knows? It could still go into the 15s or 16s, but at this point, I think the best bet would be to wait for a light volume pullback of some kind. Now, onto the actual index charts, starting with the Standard & Poor. You can see here that this stock has just been on an unbelievable non-stop tear. I was in TZA for the last week or so, and I finally got out of it on Friday, basically because it broke through that multi-year resistance level dating back to 2007. There you go. And that was my line in the sand. Once it broke that, I realized that I didn't really have a trade worth holding at that point. You have a Dragonfly Doji, which some will consider bullish from today's price action. Volume was a little bit low on the intraday pullback, and things could still keep going up on this thing. I'm telling you, there is no way to know when this market's going to stop. And I had taken a trade just below that resistance level, thinking that it would not break through it. It did. But at the time, I felt like it was a good risk-reward, that if it failed at that resistance level, and considering where the share planner reversal indicators were, though they hadn't confirmed the downtrend yet, they were hovering right near that level where the reversals tend to occur. But it didn't happen, and the market kept on moving up. I got pushed out of my positions, and so now I have to make up for those losses. So, looking at a weekly chart here, you can see we are not too far off of the Bin Laden highs at 1370, formed last May 2nd of last year. Get past those, then you could say that you could make a case that we're going to try to keep pushing higher throughout this year to try to maybe even challenge, who knows, the highs from 2007. An election year, I've seen stranger things happen before. I wouldn't expect for it to happen, but I wouldn't be surprised if it does happen. You got Ben Bernanke, who is basically doing his, indirect version of QE3, giving investors no reason to drop a dime in bonds of any type, because the payout's going to be nothing. I mean, he's basically telling you for the next 3 years, interest rates will be at 0 to 1/4%, and I'm not going to deviate from that. So I really am worried that a couple years from now, when I'm doing another one of these market analysis videos, that we're going to be saying, man, that Ben Bernanke, he really screwed us over here. He basically gave up market longevity for short-term gains, and it's really what it feels like to me. He's doing things that's very market manipulative, and it's not anything that they're hiding. They're doing it right in front of us, so there's no conspiracies about it. They're pushing these markets higher, and I can guarantee you ain't going to see any tightening of the rates this year, even if you wanted to go back on his word from the FOMC statement of 2 weeks ago, because it's an election year, and I guarantee you no politician, and it's very traditional like this, you don't see a lot of tightening of the rates during an election year for an incumbent president. So that's what you're looking at there. So who knows how high these markets can go. It could create another bubble like what we saw in the 90s and capitulated in 2001. That because there's nowhere else for money to go, you're either stuck with housing, which a lot of people still have open wounds from housing, so I doubt they're going to go in there, especially when it's such a difficult time to liquidate your assets in that particular investment vehicle. So where people are going to go, probably to bonds and stocks. You do have the European trump card that can rear its ugly head at any time and make things drastically worse for investors, just like what we saw in August and so forth. So keep that in mind. QQQ continues to rip higher at 12-year highs, going back to 131.01, and I guess that's 11-year highs. And then you got the Russell, which unbelievable chart as well. This is like close to hitting all-time highs in the Russell. So unbelievable stuff happening in the market these days. It's like the August, September, October sell-off never occurred, and the market has got an agenda going into this new year. So in any case, I appreciate the charts. I appreciate the stock ideas. I think the DEXO and the FFN are legitimate trades. The XLF, I'd wait for a pullback of some kind before, and then revisit that chart later on. So if you guys have any questions, feel free to shoot me an email at ryan@shareplanner.com. We have coaching and mentoring services now, so if there's an area in your trading that you need help with, or you just want to be taught from square one, how to trade, shoot me an email at ryan@shareplanner.com. Myself and Adam, we're really good traders. We've done it for a long time, and we'd be glad to help you out. So don't be shy, and we'll give you the best training that you could possibly buy.